Hello, this is Anne-Margaret Crowe, one of the equity analysts at Edison Group, and it's my privilege this morning to be speaking with Tristan Price, who is Chief Executive of AIM-listed MP Evans Group. And the group's principal activity is the production of crude palm oil through the ownership, management and development of sustainable oil palm estates in Indonesia. And the group has recently reported absolutely stellar results for the 12 months ended December 2020. And so my first question is this: Tristan, how did MP Evans achieve a 21% increase in the volume of crop processed during FY20? And can it maintain this attractive level of growth in future?
I'm very pleased to be here this session with you. We did produce good results, and I'd like to say that I think that it's a product of a 15-year investment program that's really coming to fruition now, almost literally. In that we produced a really good increase in our own crop, and we produced a slightly better increase, actually, just over 12% in the crop of smallholder schemes associated with our projects in Indonesia. But we had a much greater increase in crop that we purchased from independent smallholders from outside that we processed in our mills. So as we built mills, we build those with capacity to process our own crop, but as they come on stream at the beginning, there's spare capacity, and we're filling that with outside crop. So together, a tremendous increase in crop processed. And the good news is that is going to continue into the future. Our own crop comes from areas that we planted, so that's palms in the ground. And the oil palm, has a characteristic that in its early years, the yield increases quite strongly over about the first 10 years of its 25-year life. And we have not only newly mature hectares, so new hectares coming into production, but we're benefiting from the really young average age of our palm hectarage. It's about 8 years, which is very low compared to the sector's average, which is more like 14 years. So we have the benefit of more hectarage, and we have the benefit of this natural yield increase that rises very strongly over about the first 10 years of a palm's life until it plateaus and holds that yield for about the same period before gently declining.
Thank you for explaining that. And tell us, how did the movement in palm oil prices during the year affect total revenues?
2020 was a very extraordinary year, wasn't it? In fact, palm oil prices started the year at good levels after a phase of this commodity down cycle during sort of mid 2018 to 19. Prices had climbed quite strongly and started 2020 well and were set at good levels. And as COVID-19 took hold, along with prices for most things, there was a sharp fall in the price of crude palm oil, CPO, in February. But I think what's really striking is that price recovered really quickly. It's a very basic commodity. It's food. People still need to eat. And by mid-May, the price was recovering quite strongly. And that momentum carried right through to the end of the year. So that at the end of the period, we can say that our mill gate price was about $110 per tonne higher during 2020 than it was during 2019, meaning that overall our revenue increased by some 46%, partly on the back of all of that crop increase, to $175 million.
That was very helpful. And one thing I noticed looking at the accounts is that net debt increased substantially during FY20. And how do you expect the debt profile to change over the next few years?
If I may, I take issue with you're describing it as substantially. I think we have quite modest levels of debt. It did increase by about $10 million during 2020, and that was a planned increase to finance the capital program that we've been executing, say, since about 2005. And that capital program is now really coming to an end. That involved developing new oil palm areas. That includes not only planting the palms themselves, but building roads, building housing for our staff and our workers, building water management systems, and most importantly, building crude palm oil mills that enable us to process our own fresh fruit bunches. But that program is now really coming to an end, and we think that by 2023, our capital expenditure is really going to fall towards sort of maintenance capital expenditure, which we probably arrive at by 2024. And by then, we will be perhaps spending in the sort of the high single digits of millions of dollars per year, compared with the rather higher levels that we have been in the recent past as we've developed this enormous oil palm area and productive capacity. So as our crop goes up, as our revenue goes up, and our capital expenditure goes down, we certainly expect that level of debt to fall.
And okay, I take substantially back, because of course it should be taken and balanced against the high level of net assets that you've got as well. So yeah. And then can you tell us about the group's dividend?
The group over a long period has had a policy of either maintaining or increasing its dividend. And that's a record now that stretches back 25 years and more, I think. And the group feels that at the point it's reached in its development, a very exciting point where we really have come towards the end of this project, the series of development projects and mill building capacity that we've executed, and that we will have the ability to return to shareholders in a way that they deserve, having been so patient over many years. And there's going to be very strong operating cash inflow that's coming as the crop continues to increase, say from palms that are planted in the ground, and given the sort of margin that we make on the palm oil that we sell, because we're a very efficient operator, we really have capacity to return to shareholders. And we announced quite a strong increase in the dividend in respect of 2020, so rising to 22p, which was a 24% increase in the total dividend for the period. And because of our confidence in the future, we also have an intention to recommend a dividend of 30p in respect of the current year, so in respect of 2021. And we have that long record of maintaining or increasing. We have every expectation of being able to maintain that. And indeed, once we get to 30p, given the nature of the crop profile and given the nature of the expected cash inflows, we would expect that figure to rise too.
Thank you. It's a very exciting point in the group's evolution. So thank you very much for speaking to us today, and look forward to catching up again soon in future.
It was a pleasure.